Good morning, everybody. It is Thursday, August 4th, 5:47 a.m. Central Time as I speak here. December corn futures down 1 3/4 at 594.5. November soybeans down 2 at 1367 3/4. September Chicago wheat up a half at 764 1/4. September Kansas City wheat down 1 1/4 at 834 1/4. September spring wheat up 4 cents at 879 1/4. If you guys are listening on the podcast, appreciate it. If you're on that Apple app, guys, leave me a review or a rating. Could certainly use some more of those. If you're on YouTube, make sure you subscribe to the channel, like these videos, leave me a comment, give me a crop update, let me know what's going on in your neighborhood. If you'd like some additional information from me, go to my website, www.standardgrain.com. Check out my premium subscription service today, guys. I send my premium subscribers a ton of information every single business day. Morning email goes out about 5:30 a.m. Central. Tons of charts, graphics, weather info in that email every day. My daily subscriber-only videos are part of this deal. Yesterday's video was kind of twofold. I talked about crops and social media, some things you've got to be aware of when you see people talking about crops and crop potential on social media. And then I also did a balance sheet update. I took some of the yield estimates that we've seen out this week from the private groups and incorporated them into the U.S. balance sheets and tried to paint some potential price implications. If you guys are interested, sign up today. It's $50 a month. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Guys, this thing is very much geared toward farmers. I'd say 8 out of 10 subscribers are farmers, and then we've got other people in various sectors of the grain business involved. But if you guys are interested in some more info, check this deal out today. I'm going to start off with the soybean chart today because I think a lot of people are kind of puzzled in regard to the action that we've seen here the last few days. So we saw this big $2 rally from this late July low through the I guess it was early August or late July high. We rallied from 12.88 at the low to 14.89 at the high, and now we're back to 13.63. So we've given back more than $1 of that $2 rally, and I think a lot of people are puzzled by this move lower because you're looking at weather that is very much hot and dry in some areas. I've got like 4 points that I'd like to make here. The first one is that the weather forecast has in fact shifted just a little bit wetter for some areas, and I'll talk about that in a second. I think that's part of the reason for the sell-off here. The weather has something to do with it, definitely. I think this geopolitical stuff with China, and I'm going to get into that here in a minute, is noteworthy. I think it's cause for concern for a number of different reasons. We don't need tensions with China. They're our biggest soybean buyer. It's something that could result in some liquidation, or maybe some speculators who were long that are just going to say to themselves, you know what, this situation is too much for me. I don't want to be long. Thirdly, there's a lot of talk about Brazil. Brazil is going to plant record soybean acreage this fall. There's no doubt about that. The question, of course, will be weather and yield implications and what sort of crop they ultimately produce. But it looks like Brazil is going to have a monster, barring some sort of weather issue. And the last thing on my list is that I still think there's some money coming out of commodities. There was a lot of money that came into commodities the first half of the year as inflation trade type money. They were buying commodities to hedge inflation. Now that we've got recession talk, the Fed raising rates, all of those things, you're seeing that money kind of come out of commodities slowly. So maybe that's part of it. So I know a lot of people are disappointed by the action in the soybean market here these last few days. We had a sharp rally, a sharp sell-off, and now we're kind of sitting in the middle here. So not necessarily the best action, but it would be fairly normal seasonally to sell off into harvest. That would not be totally abnormal or unprecedented by any means. Let's get into some of the news. U.S. ethanol production was strong last week. Weekly output 1.043 million barrels per day. That was up 2.2% on the week, up 2.9% versus the same week last year. This is the best seasonal print in terms of ethanol production since 2018. So very good. Ethanol production margins generally strong across the Corn Belt, although they can be very highly variable due to this basis situation. Ethanol stocks were up 0.3 percentage point on the week. Stocks are still very high, second highest level on record seasonally, behind only 2019. Gasoline demand has been really messy. These EIA numbers are really noisy. I've seen things written by different analysts about this trying to explain it, but we saw a 7.6% decline last week, but we saw an 8.5% increase in gasoline demand the week prior. So I think that these gasoline demand numbers are noisy, but in any case, gasoline demand does appear to be running at reduced levels, probably due to high prices, I suppose. To get into the weather here this morning, you've got quite a bit of rain over, say, the southern half of Missouri. southern Illinois, and there's some more scattered stuff into the central or east central part of Illinois. This stuff will work its way east, and this St. Louis area in particular probably doesn't need more rain given that flooding we saw in some isolated areas, I believe, last week. You look at the next 7 days, and the weather forecast is a little bit wetter. You've got Iowa with some rain, potentially northern half of Iowa, southern Minnesota, eastern part of South Dakota. These areas were supposed to be dry, and we've shifted a little bit wetter here. There is still some conflict in the models. This is more similar to what I'm seeing in the Euro model, calling for these rains in the western part and say, southern Minnesota, Iowa, South Dakota. The GFS is not indicating this sort of stuff. But in any case, these rains, accumulation in these sort of areas expected to begin like Sunday, Monday next week. And then the eastern Corn Belt's going to catch more rain. Eastern half of Illinois, Indiana, Ohio, Kentucky are going to be wetter over the next week. When you look at the 6 to 10, it still looks threatening, and I think this goes back to the soybean discussion. Why are we selling off while we've got this threatening forecast? Well, you do have some rains coming in potentially early next week, but still in this period from the 9th through the 13th, potentially below normal precipitation, above normal temperatures, which could be friendly to the market, bad for the crops. We don't know for sure. 8 to 14 day period looks the same. So some people might look at this and say it's threatening. Others might look at it and say, no, there's more rain in the west than there was a day or two ago, and that's why it's a bearish forecast. So you can read this a couple of different ways, I suppose. China is conducting military exercises in close proximity to Taiwan. The Chinese military launched live fire drills, resulting in delays for ships and air traffic. These exercises are in protest of Nancy Pelosi's visit this week. The exercises have begun. That's what China's Navy said in a social media account. A Chinese military official said this. This establishes an encirclement of Taiwan Island. This creates very good conditions for reshaping the strategic situation in a way that benefits unification. I don't know what to make of this. It sounds eerily similar to me to how Russia acted prior to the invasion of Ukraine. And no, that's not a prediction that China's going to invade Taiwan. But this is all kind of troubling. And again, if we have tensions with China, if China has tensions with Taiwan, that means we've got issues with China. And that would be bad for demand for grains and meat products out of the United States, everything in regard to agriculture. So this thing needs to be monitored, certainly. We do have a USDA report next week. This is the monthly crop production and WASDE report. It'll be out next Friday, the 12th. You will see, ahead of this, you'll see additional U.S. corn and soybean yield estimates from private groups. So far, I think the private groups are almost unanimously calling for lower yield estimates in regard to both crops for the United States. The report could also include changes to the demand side of the balance sheets and any changes to the global supply and demand situation. USDA had the corn yield of 177 nationally last month, soybean yield at 51.5. So the trade, I think, is expecting lower numbers. We'll start to see more private estimates leak out ahead of that deal. So big report next Friday. The U.S. stock market has recovered. This has been a really nice recovery. The S&P 500 posted its best close since June 7th yesterday. That index has rallied more than 14% from its June low, and it's less than 14% from the all-time high that was posted in January as of yesterday's close. So the stock market was able to shrug off a bad GDP print last month. It was able to shrug off another Fed rate hike last month. Some economic data has been better than expected, not all of it. Comments from St. Louis Fed President James Bullard were also helpful, I suppose, yesterday. Bullard said on CNBC, as the chair, Powell, said, we're not in a recession right now. With all the job growth in the first half of the year, it's hard to say that there was a recession. Bullard did say, however, that more rate hikes are coming to tame inflation, but that's stuff that we already knew, I suppose. We have an export sales report this morning at 7:30 a.m. Central Time. Old crop corn sales expected 0 up to maybe 300,000. New crop corn sales expected 100,000 up to 400. Soybean sales, you might see some net cancellations, maybe some small net positives, 200 to 700,000 for new crop soybean sales expected. Wheat sales should be 200 to 550 for the current marketing year. Cattle market was sharply higher yesterday. Live cattle and feeder cattle both with some sharp gains. There was some cash trade reported, light cash trade, 140 to 142 in Nebraska, 135 to 136 in the South. US dollar's a little bit lower. The S&P's up 10, the Dow's up 50, bonds up a few ticks, gold's up 22 bucks. Crude oil is up 68 cents at 91.34 in the SEP WTI. Have a great day, guys. I'll talk to you Friday.